Guest who's joining in. We have Mr. KRANTHI Bathini now joining in, Director of Research at WealthMills Securities. A warm welcome, Mr. Bathini. Good to have you with us. And on a day when everything is shining bright green, tell us what exactly do you look at into the markets? Do you think the worst is behind? Are we on a course correcting zone? We are back above 24,000 levels. What does it mean for an average retail investor?
Actually, good afternoon to you. Yeah, we are discussing on a day where Nifty is outperforming in the Asian indices and
Yes.
Nifty decisively passing way above 24,000 level. What a phenomenal comeback on Indian market. That shows the resilience of Indian markets. What changed the scenario? There is a complete change of narrative of Indian markets and the perception on Indian markets in the global equity market space. The one thing is the narratives of uh, by emerging markets. In the emerging market space, India is taking the lead again right now, and all the fund managers turned positive with respect to this is just like a grace in the disguise. Okay, that's what India is taking the lead at this point of time, and the current tariff war is India is a nation where it got less impacted at this point of time. That's where the India's domestic consumption is leading the foreign portfolio flows back to India. That's where currently we are standing at 24,000 level. But if you ask me, the worst is behind. No, we need to see how the global scenario is going to change because the narratives are changing very quickly. So one need to be vigilant at this point of time due to the uncertainty in the global trade. That's where the key cause of concern still lingering on all the equity universe. But Indian markets, by and large, we taken the advantage in the this entire bargain of tariff war, and we are in the earning season. Of course, despite of some kind of a negativity that came from IT index, the banking and financial services, that's where the outperformance is coming. The banking and financial services, actually, if you remember, we have been advocating the investors to
Absolutely.
accumulate the banking and financial services. That's where the outperformance is coming at this point of time and leading the markets to stay above 24,000 levels.
Absolutely. Mr. Bathini, that's why we are seeing more and more questions come in from our viewers today. They want to all participate in this rally yet again. Probably their confidence coming back into the markets after months of, pain and consolidation that they have been seeing. So we'll straight away dive into some questions coming in for you. Satyan writes in from Tichur. He says, almost all my portfolio stocks are now green except for one. Amar Raja, that's on an 11% loss. I want to know what exactly should my strategy be. Should I hold on to this one for at least one more year? And what exactly would you advise, or should I switch from this stock? Amar Raja batteries.
With respect to the Amar Raja battery is concerned, Sakshi, first of all, the investor should know price should not change the perception on the stocks. Price is one of the key driver, but the earnings and the fundamentals that drives the stock. With respect to Amar Raja battery is concerned, the stock went into the range of 18,000. The stock price, what you see is something, there's some technical glitch, but the stock is in a consolidation phase right now. Amar Raja batteries are concerned. The stocks, in terms of the fundamentals are concerned, they are intact. But the current quarter results are crucial for Amar Raja battery. Since the investors have a time horizon of a year, you can hold on to the stock. The stock touched a range of 1800 and currently it's in a consolidation phase. Definitely you can hold on to the stock.
Hold on to this stock. That's the advice that's coming for you on Amara Raja Energy and Mobility at this point in time. Let's take the next one. Okay, we have this question from One of our viewers who's from Kolkata, Momita, writes in and she says, I have Kotak Mahindra Bank in my portfolio since last 1.5 years. I'm now sitting on a 26% profit. I want to know whether it's the right time for me to book my profits or should I hold on? Well, Mr. Bathini, you did mention in your opening comments that you've been advising on our channel banks and financials is a safe space to be in. And finally, people are reaping the benefits. Banks are performing, giving them returns. The question is it enough or should one continue to hold on for more returns? Kotak Mahindra Bank for you.
If the investor is a long-term investor, definitely one can hold on because there is a breakout in these stocks in terms of the technical are concerned. But what we can expect, the worst is behind for banking and financial services sector, and we continue to do outperformance in the banking and financial stocks in the coming quarters also. But one need to, if the investor have a very short-term view, she can take probably, if she is happy with the 30% return, she can take some profit from the table. Otherwise, she can hold on for the longer term. Still, we can see there are much more legs of rally for banking and BFSI is concerned.
Absolutely. Okay. Hopefully, Momita, this has answered your question. Next, we have this question from Vijay Simha Reddy. He says, hi Sakshi, hi Vijay, how are you? He says, I'm having Gravita India in my portfolio, sitting on a 9% loss at the current levels. I want a fundamental view on this and also whether this stock is good enough to be doing a sip on for every year. I can hold for about 4 years per se. Could you please suggest? Gravita India, currently at 1980 odd levels. In the last 1 month, there's a 10% surge on the stock, but last 6 months I've seen about a 20% loss in the ongoing consolidation that we actually saw in the stock. But in the last 1 year, if you see, the stock has actually doubled investors' money. 100% of a surge has already been seen. If you absolutely stretch the charts to 1 year. Gravita India for you, sir, what would you advise?
Actually, in terms of the valuations of Gravita India is concerned, a little bit stretched at this point of time. We need to see the next coming quarters how the earning traction that's going to be. But if you further stretch your charts of 3-4 years, the stock rallied from a range of 100 rupees actually. So it's been a 20 bagger for the investors who have been investing in the stock patiently. So there's some kind of consolidation is inevitable. If the investor is a long-term investor, he can hold on to the stock at this point of time. But next couple of quarters, results are extremely crucial for this space is concerned.
Okay, let's take another one. This one is from our YouTube that we are getting some questions. Satyanarayan Rao Kulkarni says, hi, good afternoon. Good afternoon to you, Mr. Rao Kulkarni. How are you? Says, can I add Bajaj Finserv at the current levels for the next 3 to 6 months? So along with the banks from the financial services NBFC space, he wants to choose Bajaj Finserv as a fresh investment idea for next 6 months. How would you look at it?
With respect to Bajaj Finserv is concerned, it's a multi-year high actually at this point of time. Given the kind of positivity in the financial services are concerned, he can hold on to the stock and he can add on dips with respect to Bajaj Finserv is concerned.
Okay, got that. Let's take the next question. We have Vivek from Kerala writing in. I'm holding gold Bs at the rate of 61. I'm sitting, it's now at 80, so I have about 30% profit. I want to know, is it a good time to book profit or should I continue to hold? I have a 3-year time horizon. Well, yes, all that glitters is continuing to be gold because there is 96,700 mark on gold now as of MCX gold that we are talking about. So those that got an entry even on a later aspect are actually sitting on a good 30% profit on gold Bs. Mr. Bathini, what would you suggest on gold?
Yes, actually, you are absolutely correct. All the glitters are turning gold only right now.
Yeah.
If these kind of the tariff logjam continues and if the geopolitical tensions, if they are continued to be sustained, don't get surprised if gold crossing 1 lakh level also. Okay, so he can hold on. He can hold on as long as this fear and uncertainty definitely will make the gold to shine further.
Yes. Absolutely. Ankur Modi writes in, says, hi Sakshi, how are you doing? I'm very well, Ankur, and I hope the same for you. He says, finally some stability in the markets and hope that continues. Hoping the same, Ankur. Like you said, we're keeping our fingers crossed. He wants to know, could you please give me a view on Gabriel India and on TBO Tech at the current levels? Can these stocks be really looked at from the long-term perspective? Let's pull up Gabriel India first on our screens for all our viewers to really see. Gabriel India currently is trading at 578, a 3.5% of a surge. Last 6 months odd, we have seen a 33% rally, on Gabriel India. And even in the last 1 year, 67% of a move has been seen. So slowly and gradually, the stock has actually been inching up from last April 345 levels onwards to all the way up to 580, where it is currently trading at. Gabriel India is the first one, and the second one is TBO Tech. Mr. Bathini.
With respect to Gabriel India is concerned, Sakshi, you can hold on to the stock, and this quarterly earnings are crucial for Gabriel India. Last few quarters, the results have been flattish kind of a thing, but due to their dominance in the space of shock absorbers, space is concerned, the stock has been outperforming in the recent past. You can hold on to the position for a medium to longer term perspective. With respect to TBO Tech is concerned, the stock is in the consolidation phase after the recent correction after touching 1900 level. You can hold on to the stock at this point of time.
Okay, fair point. Hopefully this has answered your question, Ankur. Next we have Satya writing in. He says, could you please suggest if Paradeep Phosphates can still be bought at the current levels over the next 1 year to 1.5 years time frame, and whether the rally can continue on this stock? If you could please suggest for 1 to 1.5 years time frame on Paradeep Phosphates. 137 is the current level, Kranthi sir.
Yeah, Sakshi, the stock recently rallied from a range of 90 levels. So by and large, it is cyclical in nature, given the anticipation of the good monsoon, make the stock to outperform in the coming few quarters. But one can hold on to the stock. Any kind of fresh entry is concerned, any strong dip, okay, one can add on to the Paradeep Phosphates. But I'm not in a hurry to, or not a great favorite of this sector.
Okay.
This area is concerned. It's just a short-term momentum play kind of a thing, just for a couple of quarters.
Okay, couple of quarters the momentum could be sustained. Let's look at the next one. Mr. Chandrahas writes in, he says, I have bought Bharti Airtel at the rate of 15.20. Now it's moved to all-time high levels. I want to know whether I should wait for some more correction to buy, or can I even enter for some more stocks and position at the current levels as well. So first purchase was at somewhere around 15.20. Now he wants to purchase more. Is the current level okay?
You can add on dips, Sakshi. There would be a consolidation in the market. Whenever there is a consolidation, just wait for the results, and definitely the global knee-jerk reactions will make the stock to give some kind of entry levels in the coming weeks or months. So at that point of time, you can add. But given the fundamental nature of telecommunication at this point of time, Bharti Airtel is much well positioned to take the advantage. ARPUs are going up. And given the duopoly nature of this market, Bharti Airtel is a strong beneficiary in this entire telecom play.
Okay, taking the next question now. Atul writes in from Gurgaon. He says, could you please advise on Fortis Healthcare? I bought this stock at 178. I have 15,000 shares. I want to know, can I continue to hold on to this stock for the absolute long term? Fortis Healthcare for you, currently at 656. He got an entry at 178, so sitting on strong profits. Atul, congratulations on that. Let's see whether it makes sense for you to continue to hold on for higher profits, or should you book out? What exactly is the suggestion that you would have, Mr. Bathini?
Sakshi, with respect to the healthcare is concerned, last 1 month, this is one of the outperforming sector, given the kind of domestic centric of nature of this sector. So healthcare can be remaining focused for the investors because this sector is much more insulated from any kind of these tariff war or global shocks are concerned. So that is the reason we can see the healthcare stocks outperformed in the past 15 days or past month is concerned. If the investor is a long-term investor, he can hold on. Of course, he's a long-term investor. But when a stock becomes a six bagger, or better to take some profit from the table and remaining he can stay invested. Always, when any stock become a multi-bagger, okay, taking some profit, taking back the capital and leaving the remaining as a bonus, okay, can be a good strategy to overcome given the kind of uncertain nature of the current volatile nature of the market is concerned.
Okay, fair point. Hope this has also helped you understand a little better as far as your own position is concerned. Let's look at the next one. This one is from Nitin. He says, I want to make a fresh entry in Samvardhana Motherson. Is it the right time? Auto stocks, we all know, and auto parts as well have been pretty dicey amidst all this tariff talk that has been ongoing. Samvardhan Motherson has been an outperformer of the recent previous rally that we saw. What would you say now at 131 levels, Kranthi sir?
Uh, with respect to Samvardhan Motherson Sumi is concerned, Sakshi, they have a very wide, diversified model. I can say it's a purely a Indian MNC operates from different geographies. Okay, so they have a nominal impact by and large. It's a global play. Samvardhan Motherson Sumi is concerned. So if the investor is a really a long-term investor, one can buy at dips and wait until the stock at this point of time. It's a global play, much diversified one, so they can take the advantage of the current ongoing tariff. Also, they can increase production in one plant, and the remaining plants they can do the adjustments. That's what the advantage Motherson have.
Okay, for a point. You know, another question on a similar lines that we have from Namita Arora says, hi Sakshi, how are you doing? I'm very well, Namita. Good to see you back. And I guess markets give you that encouragement to come back only when they are higher. So we see you missing when the markets are not in a good mood. Finally, you're coming out with more questions on the stock market. So good to see you back. Uno Minda is something that she wants to know about, Mr. Bathini. Whether this stock can be bought at the current levels. What would you advise?
With respect to fresh buying is concerned, Sakshi, if the stock stay above 900 level, okay, one can add for the any kind of momentum play is concerned. With respect to investing is concerned, okay, any dips one can buy the stock.
Okay, fair point. Hopefully, Namita, this has answered your question. Mohit writes in, says, ma'am, I have Jio Finance 2,000 shares at the price of 254. Can you please suggest for the next 2 years any target that I could look at for Jio Finance?
Actually, with respect to the results are for Jio Finance, okay, they have been flattish. Okay, there is a lot of anticipation with respect to Jio Financials are concerned in the retail investors. So just wait and observe the developments that are taking place, and whatever be the discussions that do take place, the kind of foray into mutual funds and other financial avenues are concerned, how these entire initiations turn out to be the revenue generators. That's where the market has been anticipating. That is the reason the stock is in a consolidation phase right now. If the investor is given the kind of a strong pedigree, Geo Financial, uh, if the investor is really a long-term investor, she can hold on.
Okay, got that. Let's take another one. This is Aman S. Aneja writing in. Hi, Sakshi. Hi, Aman. How are you? He says, I need a view on two stocks, Netweb Technologies and on Anant Raj, where the results are going to be coming in today. He already holds a position on both these stocks. Netweb, he has at 1810, and Anant Raj, he has at 550. What's the view that you would have on both these stocks? Remember, these two stocks in tandem had reacted negatively just in a recent correction when there was this deep seek, information that had exploded. That caused a lot of drop onto these stocks, but slowly and gradually they're coming back in momentum. Netweb and Anant Raj, Mr. Batini.
Yeah, Sakshi, these stocks were in a momentum zone. And in fact, these stocks have been outperforming in the past 6 months kind of thing. The recent shakeup of this entire space of AI and the technology is concerned, the technology stocks meltdown is concerned. Okay, and IT stocks also in a consolidation phase. The same kind of impact is there on Netweb and Anant Raj. But Anant Raj is more about a data center play, and it have the advantage of Indian data centers gaining some more prominence. So Anant Raj, he can buy at dips at this point of time and hold on to the position. With respect to the Netweb is concerned, the stock has corrected to the range of 1300 and currently around 1500 range. He can expect from this level also, from 1900, 2000 level can be expected with respect to Netweb is concerned. But just closely observe how the quarterly results are going to be panning out for these stocks. By and large, Indian play of for network kind of thing and the data center play is much more insulated when compared to the entire tech space is concerned.
Okay, fair point. I hope this has also answered your question. Well, in the end, I'll just ask Mr. Batini, your own choice. Like I always ask you, which is a big ask from all our viewers always, to get the best out of our top market experts in this recovery. Which is that one stock that you are looking at for a potential recovery and strong returns?
Yeah, Sakshi, banking and financial services, the worst is
Yes.
truly behind for these stocks. So one can pick up as per their risk appetite and the time horizon. I don't want to be very stock specific at this point of time. Pick up any stock from the banking and financial services, NBFCs. Pyramid enterprises, one can look at the stock at a strong consolidation, and they are building up a housing finance brand and a retail NBFC brand is concerned. So this stock looks very interesting to me at this point of time. Since you asked stock specific question also, so that is the reason. Okay, the Pyramid Enterprises is the stock to look at this point of time. And also in the banking, if the investor have a high risk appetite, look for banks like CSB Bank. It looks very attractive in terms of the valuations are concerned. Otherwise, if the investors have a very less risk appetite, one can look forward for the large cap banks. It can be ICICI, Axis, or HDFC Bank, or in the PSU space is concerned, it can be Canara Bank and State Bank of India. These are the stock specific movements one can observe.